Bitcoin alone will not solve the entire debt crisis. The U.S. needs a dual approach: Bitcoin for the future and gold for the past. The U.S. officially holds 8,133 tons of gold, about 261 million ounces. This massive undervaluation gives the government substantial room for revaluation. The inevitable announcement will declare a new strategic gold price, $20,000 per ounce. This number is chosen specifically because it makes the math work for debt backing and offset. At $20,000 per ounce, the U.S. gold reserves are instantly valued at $5.2 trillion on the balance sheet, up from $11 billion. Combined with the Bitcoin revaluation, $1 trillion, the U.S. has generated $6.2 trillion in new balance sheet value. This doesn't eliminate the $37 trillion debt, but it technically offsets it, making the government appear solvent and reducing the debt-to-GDP perception. The theft of purchasing power. When gold is officially priced at $20,000 and Bitcoin moves toward $1 million, the dollar has essentially been destroyed. Relative to gold, the dollar has lost 85% of its value. Relative to Bitcoin, the dollar has lost 90% of its value. The loss of 85 to 90% of value against hard assets translates to the dollar losing 50 to 70% of its purchasing power against essentials like food, energy, and housing. In practical terms, if you hold $100,000 in savings today, after the revaluation and the ensuing inflationary period, which may hit 20% or more annually, that same $100,000 will only buy what $35,000 could purchase 3 years prior. You lose 65% of your real wealth. The government's $37 trillion debt remains nominally the same, but in real terms, due to the devaluation and inflation they caused, it is effectively reduced to $13 trillion. They have successfully erased $24 trillion of debt burden by stealing purchasing power from savers, creditors, and dollar holders.